What if I told you that the UK economy, the same economy that was called the sick man of Europe, battered by Brexit, shaken by political chaos, and pushed to the edge by soaring inflation, suddenly looks alright? Not booming. Not miraculous, but strangely stable. After years of warnings about collapse, recession, capital flight, and declining living standards, the data now tells a different story. Growth has returned, inflation has cooled, the pound has steadied. Investors are no longer panicking, so what changed? Did Britain secretly reinvent itself? Did policymakers quietly fix deep structural problems? Or is this calm just the eye of a much larger storm? To understand why the UK economy suddenly looks alright, we need to rewind and follow the chain of cause and effect that brought it here. Because the real story didn't start this year, it started years ago. Welcome to its financial history too. Back in 2016, the UK shocked the world with the Brexit vote. When Britain chose to leave the European Union, markets immediately reacted. The pound crashed. Investment stalled. Businesses delayed expansion plans. The promise of taking back control collided with economic uncertainty. The divorce negotiations dragged on for years. Companies shifted supply chains. Financial firms moved parts of their operations to Europe. Growth slowed. Then came 2020. The COVID-19 pandemic hit like a tidal wave. Lockdowns froze entire industries. The UK government launched massive support packages, paying wages and guaranteeing loans. Public debt surged. But here's the twist. Almost every advanced economy did the same thing. For a brief moment, Brexit wasn't the main issue anymore. The world was facing a shared economic shutdown. When economies reopened, something unexpected happened. Demand exploded. Consumers who had been locked indoors started spending aggressively. Supply chains, however, were broken. Shipping costs surged. Energy markets tightened. And then in 2022, Russia invaded Ukraine. Energy prices went through the roof. Gas costs in Europe soared to historic highs. Inflation spiraled. In the UK, inflation peaked above 11%. Food prices jumped. Mortgage rates climbed. Household budgets were squeezed from every angle. Then came the political breaking point. In September 2022, Prime Minister Liz Truss unveiled a mini-budget filled with unfunded tax cuts. The idea was simple: cut taxes, boost growth. Markets did not buy it. Bond yields spiked. The pound plunged to near historic lows against the dollar. Pension funds faced collapse. The Bank of England had to step in with emergency bond purchases to stabilize markets. It was a rare moment when a developed country triggered a financial panic entirely on its own. Truss resigned within weeks. And that moment, ironically, became the foundation of what we're seeing today. Because the chaos forced a reset. When Rishi Sunak took office, his message wasn't bold growth or radical reform. It was stability. Fiscal discipline returned. Markets calmed. Bond yields fell. The pound recovered. At the same time, something else was happening globally. Energy prices began to fall. Europe avoided the worst-case winter energy crisis by diversifying gas supplies and reducing consumption. Wholesale gas prices dropped dramatically compared to their 2022 peaks. That fed directly into lower inflation. Inflation falling is not the same as prices falling, but it changes expectations. It allows central banks to stop raising rates aggressively. The Bank of England slowed its rate hikes. Mortgage markets stabilized. Business confidence stopped collapsing. By 2024 and into 2025, GDP data began showing modest but positive growth. Not explosive, but positive. The technical recession that many feared either proved shallow or never fully materialized. Suddenly headlines changed tone. Instead of Britain on the brink, it became UK proves more resilient than expected. But here's where cause and effect matters. Why does the UK look alright now? Because expectations were so low. After Brexit turmoil, pandemic debt, energy shocks, and a government-induced bond crisis, the baseline was disaster. Stability itself began to look like success. But stability doesn't mean strength. Let's look at the breaking point more closely. The 2022 bond crisis exposed something critical. Britain relies heavily on international investors to finance its deficits. When trust breaks, borrowing costs spike immediately. That vulnerability hasn't disappeared. Public debt remains high. Productivity growth, the engine of long-term prosperity, remains weak. Business investment as a share of GDP still lags behind historical averages. So what about the rise we're seeing now? Several short-term factors aligned.